Hi guys, this is Abdul Manan and we are going to study the evolution of efficient hypothesis EMH. This is the most significant theory in finance and most of the investment and trading theories are based on EMH. So I thought that it is a better idea to start understanding EMH from its basis. So, Adam Smith played a key role in giving insight to the researchers and theorists about EMH. Although Adam Smith Adam Smith's own work was dedicated to economics and commodity market, but it played huge role in capital market as well. So let's start understanding the base of EMH and its evolution. Uh, Adam Smith was the Scottish economist. His lifespan was 1723 to 1790 and known as father of modern economics. He wrote his famous book The Wealth of Nations in 1776. His key concept was invisible hands that play the role in the market. Those invisible hands regulate the market, the price of the market. Mm, Individuals in all commodity markets take action out of their own self interest, but those actions are guided by the uh, those invisible hands, supply and demand. When the supply of any commodity gets increases, its impact on the uh, prices as well. Prices will go down. Similarly, when the demand rises, prices also rises. So, uh, supply and demand play the role to adjust the prices. There is no central authority in the market when the market is truly the comparative market. And despite the fact those invisible hands play the role and they adjust the market and two powers, supply and demand, when the prices of certain commodity crosses certain threshold, these forces set in and come to rescue and push the price down. If the price go extremely higher, then the benefit to society emerge unintentionally because of these forces. EMH applies Smith's logic to financial market. His original logic was for commodity market, but EMH applies the same logic that investors seek profit. They seek profit out of their self-interest, and they act on the basis of information they get. Uh, and collective trading behavior reflects also known data in prices. So prices get adjusted by the information. They immediately incorporate all information about that certain asset in the market, and we say that the prices contain every information about that particular security. Prices become the signal of true value, similar to the Smith idea of market equilibrium. Smith says that these forces of supply and demand comes into bring the prices into equilibrium. Similarly, price signals are also at a equilibrium point because of informations. Smith's work laid the philosophical foundation for the market-based theory. He might formalize these ideas with the mathematics and statistics. However, EMH brought that idea much forward and based on the proper mathematical derivations and statistical equations. Show, then EMS shows how foundational ideas evolve and influence the modern finance. When we compare both EMH and Adam Smith's the main wealth of nation core idea, Adam Smith's idea is regarding invisible hand, and those trader take action out of their self-interest, but the efficient market says that prices reflect all the available information. The focus of Adam Smith was on the real economy, goods and services, whereas EMH is dedicated to financial markets, stocks, bond, derivatives. Mechanism, individual choices in free market, and EMS says self-interest traders act on new information. Assumption, people seek profit, and it ultimately gives societies a benefit as a whole because of the equilibrium. Similarly, EMS says that the rational investors are rational. They take actions rationally. They don't take action in haste. They are well aware of the prices, and they take information. They take those information and take action on the basis of those prices and those informations. Outcome, efficient resource allocation. EMS says efficient price discovery, control structure, decentralized, no central power. Adam Smith believe in the free market, and EMH decentralized, no arbitrage. Limitation, no formalized for speculation or rational behavior. As EMH assume rationality and perfect information. So the main idea of EMH is that the prices reflect all the information about that security. So this idea didn't came overnight. It didn't come overnight, and because there was a well-established theoretical base for that idea and search of other economic economists. And I gave here one of the hint that the Adam Smith work regarding invisible hand gave a philosophical base to the EMH idea. Thank you very much.